Imagine you're investing in a prime off-plan unit in Dubai, then you wake up one morning and realise you're stuck. The developer won't allow you to resell, the market has shifted, or there's no buyers and your money is locked. That nightmare scenario happens to investors every year, but it doesn't have to happen to you. Today I'll show you how to execute the perfect exit strategy step by step so you can resell or assign your off-plan project with maximum profit and minimal risk. By the way, my name's Chris Channer, and every week I help investors just like you make smart decisions in the Dubai real estate market so you can protect your capital, optimize returns, and sleep well at night. If you're thinking of investing in off-plan in Dubai or already have, reach out to me. My phone number, email, link to book a call, and your free 2026 Dubai off-plan buyer's guide are all in the description below. I speak with buyers just like you every week, and I'd be happy to help invest or map your exit strategy too. So let's talk about why exit strategy matters. You likely bought off-plan because of the promise of growth, flexible payment terms, and the chance to get in early. But what most investors neglect is how will you get out and when. Without a plan, you risk being stuck in a project you can't sell, hold longer than expected, or accept a much lower price. Dubai's market is dynamic, with resale, inflation, and liquidity all shifting. According to the industry analysis, assignment or resale of off-plan units is now a common exit method, but only for those who follow the rules. In Dubai, you're not just buying a property, you're buying into a timeline, a developer's policy, a payment plan, and a market cycle. Your exit strategy needs to align with all those variables. There are primarily two exit methods for off-plan property in Dubai. The first one, an assignment sale, resale before handover. You transfer your contract to another buyer, typically when the project is under construction, but before completion. This allows you to capture appreciation without waiting for handover. Key benefits: shorter hold periods, potential higher margins, lower exposure to post-handover risk. The key risks: you must meet developers' payment milestones, must secure a buyer, there will be assignment or transfer fees, and market timing is required. The second, sell at or after handover, secondary market resale. You hold the property until completion or beyond, and then sell it as a ready-to-move-in asset. Benefits: larger buying pool, more end users, less developer risk, clearer protection. Risks: longer hold period, you may pay more installments, you may face higher selling costs or competition from new supply. Understanding which path fits your goals is crucial. Let's walk through the step-by-step process of assignment or resale so you can prepare ahead. Step 1, check your SPA, which is your sales purchase agreement, and the developer resale policy. Not all projects allow assignment. Most require you've paid a minimum percentage before resale, often 30 to 50% of the purchase price. Read your contract. Look for clauses about assignment, NOCs, which is a no objection certificate, and fees. Step 2, secure an NOC and obtain developer approval. You'll need an NOC from the developer. Without it, the contract cannot legally be transferred. Fees sometimes may apply. Step 3, find a buyer and negotiate. Timing matters. You want a buyer who's ready, understands they are taking over your payment plan, and is agreeable to the terms. Price your exit realistically, factoring in any assignment or transfer fees, DLD fees, and remaining installments. Step 4, transfer and register the assignment. Once the buyer agrees, execute the contract transfer through the developer and/or via the Dubai Land Department or Oqood system. Registration costs and commission both apply. Step 5, exit with a profit and reinvest. After the transfer is complete, you exit your contract. The new buyer takes over future payments or handover. You release profit and you're free to redeploy your capital. Now let's come on to timing, market, and developer factors. Exit strategy success depends heavily on timing, the developer, and the market condition. First, timing. Many investors aim to flip or resell when the project is around 40 to 60% completed, or just before handover. That's when the value has increased, but the risk for the buyer is still somewhat low. If you exit too early, the market hasn't priced in value yet, and there's fewer buyers. If you exit too late, you've paid more installments, you might face competition from ready products, and your returns may shrink. Second, the developer. Choose a reputable developer who allows assignments and has a proven track record of delivery. If the developer delays or imposes restrictions, your exit becomes harder. And third, market conditions. Demand, interest rates, supply, infrastructure, all affects the buying pool. Always evaluate if the market is hot enough to support your exit price. And a flip only works when someone else is willing to pay more for your contract. Let's talk about the cost, pitfalls, and how to protect yourself. Even a well-chosen exit path has costs and risks. Assignment fees. Developers often charge admin fees or resale fees. For example, it could be anywhere from 3 to 10,000 dirham for a reassignment. Next, we have the DLD and the Oqood transfer costs. Transfer fees, often around 4% of the original value, may apply. Next, we have agent commission. If you use a broker for the resale, expect at least a 2% fee of the resale price. Remaining installments. If you exit too early, you may have to cover future payments, and the new buyer may negotiate for a larger discount. Developer restrictions or delays. Some contracts restrict reselling until a certain milestone or prohibit assignment entirely. Without reading your SPA, you risk being locked in. How to protect yourself. Ensure your SPA, which is your sales purchase agreement, permits assignment and lists all the conditions clearly. Choose a developer with a flexible resale policy and proven delivery history. Set a target profit margin, for example 15 to 20%, so your exit is meaningful. And monitor your installments and cash flow so you're ready to exit on schedule. Let me walk you through a real-life hypothetical to illustrate this clearly. You buy an off-plan apartment in JVC for 1.2 million dirham with a payment plan of 10% deposit, 30% over 2 years and 60% on handover. After 18 months, the market value has risen to 1.5 million dirham and the project hits 55% completion. You've paid off 30% so far. You secure a buyer who steps in at 1.45 million dirham. You pay assignment admin fees of 5,000 dirham plus the DLD fees for transfer. You exit with 250,000 dirham growth return on your initial 360,000 dirham paid. About 69% return in under 2 years. Now you redeploy into another off-plan unit and hold for more returns. That scenario only works if all steps align. Timing, developer, buying pool, costs. Without them, you could still be holding at 100% payment and facing a market correction. So which exit strategy fits you? Ask yourself, do you need your capital back within 2 to 3 years? If so, assignment sale might suit. Do you prefer rental income and a 5 to 10 year horizon? Are you comfortable being a landlord? Hold and rent, then resell. Do you have flexibility and want to trade frequently? Use flipping or assignment sale again and again. Successful investors plan their exit before they buy. They choose projects, contracts, and payment plans with exit in mind. If you're planning to invest in the Dubai off-plan market and want to build a clear exit strategy, I'd love to help you map it out. I work with investors just like you every week, aligning your purchases with your exit so you don't get stuck and you maximize profit. You'll find my phone, email, and link to book a call and your free 2026 Dubai off-plan buyer's guide all in the description below. Reach out anytime and I'm ready when you are. If you found this video valuable, please like, subscribe, and hit the notification bell because I'll be bringing you more masterclasses on exit strategies, rental optimization, and market timing in Dubai. Thank you so much for watching and I'll see you in the next one.